Garcia, politics aside, I mean, listen, Cook might stay. We don't know. She might voluntarily resign, and then Trump gets replaced her, or a court will uphold that this is valid and she gets replaced. If she does indeed leave the board in some form, and a dove comes in, does it change the way we should look at the Fed or interest rates?
Well, I think that we should be looking at this either way, because I think regardless of what happens, clearly Trump is putting a lot of pressure here. Powell is going to be out next year. Likely somebody's going to put in who is somebody of his choosing, who is going to be ideally lowering interest rates as he wants. And I think that's something the markets are trying to figure out. This is why you see the yield curve steepening, because it's widely expected the rates are going to start to come down here in the short term. And longer term, though, this is actually likely going to put more pressure on inflation. That's like the irony of all of this. That's why the longer end of the curve has been rising, because this could actually stimulate the economy and create additional inflation in the long run. So even though he's putting all this pressure, it doesn't mean inflation is done, and actually longer term could potentially be an issue. So I think that's something to watch out for.
That gap between the 2-year yield and the yield on the 30-year, Dan, the widest in multiple years.
Well, you know what's interesting about this, and again, this could just end up being, a sideshow. It could end up just being a ridiculous situation. I mean, the president was found liable in a civil case in New York State for doing what? Inflating the value of his property to get a mortgage and insurance. I mean, so, like, what are we doing here? You know, we're spending a lot of time talking about this. Why doesn't any of these reporters ask that question? You know what I mean? Like, it's just kind of funny to me. We're just letting this go by, and there's no due process. And we haven't been shown anything.
There's been no charge. There's an allegation.
Okay, but he's going on.
But there's not even a charge. Like, if there's a charge.
He's charging it. He's the president.
Well, he's saying it, but he's not charging it. There's no legal charge. I think that's the
It's a clown
line.
show, okay? And again, I mean, I don't even. We're spending a lot of time talking about this.
Does the move in the bond market change anything for Dan Nathan with regards to
because it hasn't moved. I think what Courtney said is perfect. I mean, if it stokes inflation, you're going to see long yields go higher, and that's what's kind of happening. It's happening all over the world, too. So there's this focus right now that inflation is not under control, that every government on the planet has massive debt piles. They want to see, yields go down because they're sick of servicing this debt. We have $1 trillion in debt to service, and there's a push and a pull, right? We get the yields lower, we spend less on our debt service, but it is stimulative, and then you have this situation where who knows what could happen.
Well, what I would add there is that when we do see a rate cutting cycle begin, it tends to be negative for the equity market. So as much as we are welcoming it for the economy, perhaps, at maybe 6 out of the last 8 times this has happened, the market saw either a major correction or a bear cycle. So to me, I don't know, maybe we should be careful what we wish for.
We did cut rates last year, Guy Adami, September. A lot of people looking at that in a political way. What doesn't matter? The point is the 10-year bond yield and mortgage rates were the same then as they are now, and we got a cut. What are the odds we get a cut, whether or not it has anything to do with Lisa Cook or not? We get a cut in September, and the bond market says, you know what, worried about inflation, send yields higher.
Better than 50-50. Bank of England cut rates, I think, on August 7th. Don't at me if I'm off by a day. Now they have inflation at 18-month high, and bond yields have been going higher. So to your point, I think the chances are very good. And Dan just mentioned it. Just go across Europe and look what's going on. Look what's going on in Japan. I think there's a very good chance that, again, if you go on this rate-cutting cycle, to Katie's point, I mean, historically it's been because things are breaking down. Maybe it's a little bit different this time. But I'll say this, be careful what you wish for, because it doesn't mean the back end of the yield curve is going to move. And the market will challenge this newly constructed Fed at one of these days in some way, shape, or form. And typically they challenge it by selling off of the bond market and pushing yields higher.